What's up, guys? Good morning. How we doing? Hope you guys are having a good morning here so far. Mark got a little pop and drop here off the open, now testing 22,000. 22 is going to be a tier 1 level that we've had our eye on for a while. Not S tier, but tier 1. I anticipate we'll probably see at least another test below. There we go, getting in real time. From there, we'll see if the bulls can step in, man. But this has been a pretty aggressive drop after that initial pop after market open. What's up, guys? How we doing? Hindmost, Chris, Javaz, Dennis, welcome back, guys. Prince, Giovanni, Joe, how we doing? All right, now as far as news today, scheduled news, we just have a Trump national security meeting at 10 o'clock, that's Central Time, and then Fed's Daily is speaking at 3. That's really it. So we'll keep an eye out for unscheduled news, but the schedule's pretty clear, man, so we'll see what we can get. Now, with these aggressive moves downside, I mean, you look at the daily chart, right, bottom of your screen, it's a relatively sizable bull bar compared to what we've been seeing as of late. But when we get these aggressive moves downside, in the market that we've been in, I tend to be hesitant to start thinking, yeah, I'm going to slap a short and look for 150 points. We just haven't been seeing that play out very well. Now, if we get that today, great. We'll maybe start looking at, hey, maybe we're going to start getting some trend days here. Right now, I'm not really buying it necessarily, but we'll take the price action as it comes and see how it goes. Kane, what's up, brother? John, tubed out, exposed. Exposed says, good morning, everyone. Still have both PAs, taking it slow. Gonna go for another couple evals for scale. Steven, good morning. Eric, good to see you. Tony, C-Mac, how we doing, guys? How we doing? All right, we're still getting a push down here through the 22s. It's to be relatively expected. I think the Bears at least wanted to see 21 something. Yeah, it's just hesitant. I mean, whenever we see something like this, you got to think, when are the bulls at least going to try to step in? I mean, this is quite the embarrassing performance so far out of the bulls, to be honest with you. We get a small little pop, big old drop. But again, hey, you got to think, right? Range market. So does this go to 21.3 today? I don't know. I think you're getting a lot of bears betting on that. I just don't see it, and unless the range market happens to turn into a trend market today, which is a really tall order. But again, hey, we'll watch the price action, see what we get. Yeah, Christian, market man. Wanted to test below 22. We got that test, so from here it's a bit more up in the air. We got to see if the bulls can step in and make something happen here. All right. Okay, well, I'll tell you what, it's Friday, so I'm going to make it easy on you guys. 250 likes in the next few hours, and I'll give away, which, by the way, 250, we've hit that plenty of times. 250 in the next few hours, and I'll give away a free 50K Take Profit Trader test account. I'll transfer it right over to you, a 50K Take Profit Trader test account. All you have to do is hit the like button. Can't do that, man. I don't know what to tell you. But I got an account burning a hole in my pocket, so let's get rid of this thing. And by the way, if you're not familiar with Take Profit, they offer daily payouts. So if you're green, man, you can pull the account out. I'm sorry, you can pull the money out right away. Right, you can see after this push down through 22, the bulls are trying to step in now. We're getting a couple of wicks that we weren't really seeing before. Bears still not letting up, though. We'll see if they can push us down into the mid-9s. But imagine, though, the bulls aren't going to give up that fight super easily. Gains! Just got my second eval, 50K on my way. Awesome, brother. Pete, this is the Nasdaq. Technically, this is MNQ, the Micro NQ Futures Contract. All right. Okay, so for context here, top left of your screen, that's a 5-minute chart. All right, which is kind of what I'm watching to execute off of today. Top right is the 2-minute chart. You can see, you know, even on this bigger move, the 2 minutes a little bit wicky, especially through the middle here of this trend. Well, I'd say the back half of this more like bearish trend. It gets kind of wicky. Okay, whereas the 5-minute is still wicky, but a little bit cleaner. So I will sometimes execute off the 2-minute. You guys have seen me do that plenty of times. Right now, just with the way the volatility's been in this market, I'm preferring the 5-minute. And then this down here is, of course, a daily chart. Just looking at this for context. And again, when I say, hey, range market, we're looking really at this big chunk. The market has done kind of a whole lot of nothing. It's been in a range of maybe 500 points, 1,000 points for well over a month. So, again, that's why when I'm looking at this, it's like, okay, well, is it really the day to get short and hold to 21,200? I just don't see it, man. I don't think the market inertia would allow that. Unless, of course, we got some unscheduled news, which, again, if you're just joining us here, the scheduled news today is just a Trump national security meeting here in about 45 minutes. And then we have a Fed speaker at 3 o'clock, which, you know, in 2025, a Fed speaker, whatever. In 2022, Fed speakers that were not Powell were actually making the market move because they were talking about inflation, policy. But today it's kind of old news. So the Fed speakers don't do a whole hell of a lot unless they start talking about tariffs. Okay, so we'll keep an eye out, but that'll be well after most of you guys are gone for the day. All right, we're getting sticky around 22,000. Kind of expected to see that at least a little bit. Again, that is a tier 1 level. 22, so you got to know that people are going to be watching that as an area of interest. Christian says, when would you say that it's a good break of 22,000? Well, I mean, let's look at this, everybody. Okay, we're looking at this here. You look at 22. For me, I mean, you could argue it was a good break at this close because we closed beneath the level. All right, to me, the level is not so crucial that, like, I'm waiting for a hard break at 22 to get short. No, I'm just watching price action. But when we're looking at this, look, you come into 22, what happens? The bear bodies start to get a little bit smaller on average. You get a couple of bull doji bodies mixed in, and the wicks start to get bigger on the downside. I mean, really, what does that tell you? It tells you either one of three things are true. Either the bears are taking their foot off the gas, the bulls are putting their foot on the gas, or a little bit of both is happening. But I mean, still, we're moving downside, so the bears are still slightly in control here. But the balance is shifting. Here, the balance was, I mean, the bulls were just stepping aside, letting the bears take control. But then when you come into 22, the bulls try to step in. They're like, yeah, I mean, look at the daily, man. This is a range market. I can kind of just buy below whatever and just set a stop way low and kind of wait. That's going to be the bulls' mentality until this proves to be a really aggressive trend, or the market as a whole puts in such a big trend that we can actually make the truth or a legitimate argument that, hey, you know, maybe we're going to start seeing some actual trend market action. And that's when the bulls would kind of just stop themselves out, take a big loss, step aside, and the bears take it way lower. Here, I don't know. The more you start taking out lows around this region, like right now, there you go, like right now, I think the more hope the bears have to keep this going into the 21s. But again, I got to tell you, even though 22 is a tier 1 level, and I say that constantly, you know, 21,000, 22,000, 19,000. It's not like I'm using it as, like, if we pop back up to 22, it's not like I'm just getting short, necessarily. That's not why I look at it. I look at it as a region of, hey, I know people are going to watch this. It might slow things down. We might kind of stick there, at least for a bar or two. And then also, you know, stop hunting. Like, for example, an S tier level, like 20,000. An S tier level is above a tier 1. It's going to be 15,000, 20,000, 25,000. I use those, if I can, for hunting stops, which you guys have seen us do on the stream. I took 1 or 2 trades around 20,000 that we really got a lot of liquidity out of using stops for kind of rocket fuel in our direction. But I mean, right now, I mean, look at the 2-minute chart, top right. This bear trend started to lose strength and is now turning into a trading range. What happens in a market like this? Little trends turn into ranges before they either make a second leg push or reverse. We saw this happen once last week on the 5-minute chart where we saw a big push. I forget, I think it was, I can't remember if it was down then up or up then down, but we saw a big push and then damn near an instantaneous V-shaped, I think it was down then up, recovery, because we caught a trade on it. But over here on the I mean, even on the 5-minute, you're starting to put in a trading range, right? But on the 2-minute chart especially, you can really see it. In a market like this, you get a push, and then it goes into a trading range while they kind of argue back and forth, and then you either, depending on the price action, it's basically 50-50 at this point, right? But you can kind of, once you start to get breakouts, you can kind of make an assessment. You either get a second leg push, or more commonly in a range market, you kind of get like a slow fade back upside, right? Because again, look at this. A lot of bears are going to be thinking, it's a range market. I don't know if there's a lot of gas left. And bulls are going to be saying, yeah, it's a range market. You know, I can probably buy, again, below kind of anything and set my stop pretty damn low and just wait until we get a push back inside of the range. And then someday that mentality, that thinking is going to fail a couple days in a row, and then we have to start looking at that and saying, maybe we're entering a trend market for the first time in, 6 weeks. And that's gonna come. It just hasn't come yet. Now look at the 5-minute, that last bar that just got put in, the last 2 bars, big bottoming wicks, dojis. Right, so again, trading range. The 2-minute is really what has my focus right now. It shows it better. Top right of your screen really shows that range well. So let's keep an eye on that, see if the bears can drag this thing lower and maybe enter kind of a bearish channel. Again, you're getting a couple more bull bars mixed in than we were seeing on that big downside move. Obviously, we had a ton of consecutive bear bars. But now we're getting more bull bars mixed in, which, what does that tell us? I mean, price action is king, right? It's very basic. It tells us the balance is a little better. than it was previously, right? So just got to keep that in mind. What's up, Lee? How we doing? Patel, good morning. Good to see you, brother. So, I mean, worth mentioning here, earlier this morning, a couple of hours ago, the Fed's Waller. The big headline is, the Fed is in position as early as July for cuts. So that's kind of like the bigger headline here from this morning. But, I mean, listen, man, when the market moves off of Fed talk, as far as policy stuff, it's just so, it's just boring because we all kind of know that they're going to take their time. It's eventually coming. They're going to tiptoe around the question for months and months and months. And then eventually they'll do it and it'll be a small little cut. They're steering a damn big ship, the U.S. economy. They got to go slow. The Fed does not want to be wrong. The Fed would rather be late than wrong. That's their biggest concern, is being right when it's all over. And not making a mistake, even if they're late, because they can still claim victory. Right? You'd kind of have to do the same thing if you were in Powell's shoes, to be fair. All right, I'll be right back. This trading range, we gotta see what this turns into. It could turn into a little bearish channel, but I'll be back in 2 minutes. I see the move. I see the move. Don't you worry. Crazy move. It's just, it's tough because you look at the 5-minute chart and we broke out of that little range, right? We got that second leg down like we just talked about. When you get a big, giant bear bar. I mean, that bear bar was 88 points on the 5-minute chart, which is, this is actually a good thing, right? We're seeing volatility come back, which is something we've been talking about for, I mean, it feels like about 6 weeks. So this is good. It's just, again, when we take into consideration the context of the market, it's really tough to take a bet that this thing's going to go another 500 points. It might. But for me, that would be a lot more like, okay, I now believe that in this market environment, people will let that happen. Institutions, algos will let that happen. Right now, they haven't been letting that happen. Okay, so in all reality, this from top to bottom is, what, about a 230-point move, 240-point move? Ish. You know, it's not nothing compared to what we've been seeing lately, but you gotta understand, like, lately it's just been crazy low volatility. So that move is good, it's fine. You know, but it's not 1,000 points. So we'll see if the bulls let this continue here. But you know they're gonna be stepping in periodically if it does. Now, reminder, hopefully you didn't, but if you did, it happens. If you did just blow some evals on that big move, Apex is 80% off for a little bit longer, single day pass with code BIG. Same at Take Profit Trader, but Take Profit Trader is no activation fee, which is a really big deal. And 30% off if you use code BIG. But hopefully you passed on that move. But if you did blow, that's okay. But I am giving a free account away today if we hit 250 likes, which should be very, very easy. What's up, Taz? How we doing, brother? Okay, now as far as 50% retracement here on this move, I mean, we should consider that, right? It's pretty much, this whole move top to bottom is, again, about what, 240 points? So it's kind of, you know, if the bulls are able to bounce this back up, we'll have to test that 20 EMA. By that time we'll probably have dipped below 22,000, and then that, you know, 40 to 60% retracement zone is an area to watch, because, man, we were just talking about this in the market environment that we're currently in. You know, we're gonna see bulls buying below anything and saying, for the last 6 weeks this has worked, just put a big stop in and it reverses at least to the 50% retracement, and then when they get there, after they averaged in all the way down on this move, they start hitting out at break even, somewhere between like here and here. Right, so I expect if the bulls are able to bounce it up, that's a big if, based on the price action so far, probably see some hesitation, kind of right above 22,000, up to maybe like 22,040. Yeah, Eagle, you might be looking at a different contract expiration. I rolled over to the Septembers at the beginning of the week. That might be it. Eric, it's Quicksilver. I gotta tell you, I'm shocked he hasn't shown up yet. Maybe today's the day he went long. Yeah, I mean, Christian, you know, we could talk about this for weeks and weeks on end. The reality is, to boil it down very simply, for scalps, I first try to determine what kind of market are we in, which I sound like a broken record. We're in a range market the last 6 weeks. And then I look at the intraday and I say, what are we in right now? Is it a zoomed in trend inside of a range market? Right? There's different levels, right? Like intraday, what are we currently doing? Okay. I would say right now we're in another sideways little range with an overarching bear trend in a big picture range market. Okay, so you have to determine what are kind of those 2 or 3 precursors to make decisions. And then it's just price action. You know, if you're in a range market and intraday you're in a bull channel, if you want to wait for confirmation, wait for a back test to the bottom side, the ascending support, and then a small bull bar closing near its high, and buy the rollover of that and wait for a test to either the middle or near the top, like 2/3, 3/4 region of that channel, that bull channel. Context is everything. I mean, really, when you stop trying to look for like the magic indicator, or this or that, or the guy that you can just follow all his trades and you'll make $1 million. Well, we don't have the same brain, right? You have to be able to know how to manage these trades. And what happens if you find somebody that you're actually making money following and then they just stop posting? Then what? This isn't complicated enough. This is very hard, don't get me wrong, but it's not complicated enough to not just learn how to do it yourself. Don't you want to be self-sufficient? So, name of the game here is context. Get the context right on the day, get the context right on the overarching market, and then do things that make sense. And when I say that and you're like, dude, I'm 2 weeks into this, I have no idea what the fuck that means, you'll figure it out. Just keep hanging out. I think you'll figure it out pretty quick. For example, if we're in a range market right now, but if we were in an overarching trend market and the market was trending hard in like a bear market, and then we saw this move here, look at this bar here. Would it make sense to buy the rollover of this bar here into this bar if we were in, don't look at the current market, if this exact move happened and we looked at the daily chart and we were in a hard bear trend market? Would it make sense to buy the rollover of this bar into this bar? It's a bear continuation setup. Would it make sense? No, of course not. No. Could it bounce? Sure, but the probability of it bouncing is probably in that context about 30%. Now, in a range market, the probability of that bouncing goes up to maybe about 40%, maybe 45%. It's going to take some time for you guys to, like, fully grasp and believe the things that I'm saying. It's just, that's just how, that's the reality. Understand the context, do things that make sense. All right, well, ATR here this morning so far. Now we're sitting at about 40, which is about the biggest ATR I've seen on the 5-minute chart in a little while. Which is good. Again, you guys, we've talked about this a lot. It's like when volatility needs to come up, the best way to do that is for the market to kind of just fall off a cliff and do so relatively quickly. And here we go. I mean, that bar there, that's going to have a range of about 80, 85 points. All right, now believe it or not, the Nasdaq on the day, I mean, man, it's down like 0.4%. So, I mean, when you start considering that, it's like, you know, we're not down 5.5% right now. And this move, man, top to bottom is what? Not even 300 points. Yeah, maybe 250 points. 260, 270. Yeah, we just got a headline here from the Wall Street Journal. It says the U.S. prepares action targeting allies' chip plants in China. ASW, I have accounts with a bunch of different brokers. It depends on the purpose. Whether it's an options portfolio, a stock portfolio, an ETF portfolio, a futures portfolio. But stop spamming the same question. It's obnoxious. Okay. Well, we keep getting here. I mean, you look at the 2-minute chart. It really shows things better here today. We keep getting little trading ranges. Second leg down. Little ascending bull channel. Third leg down. And the fact that the market is not really pushing any kind of intraday average range to a ridiculous extent, at least. I mean, we're still inside. I mean, you look at the daily chart. We're still inside of the session candle. And the bears are clearly in control here. I expect we're probably going to see at least another trading range form, and then we'll see if we end up getting a fourth. It's kind of ridiculous. A fourth leg down. Or if the bulls can actually try to put together some kind of little reversal. It'd have to be very clean. I would need to see at least probably 3 consecutive bull bars growing, closing near their highs for me to get long. And if we saw that, I'd probably look to swing that into a pretty big swing trade. Whereas to the short side, just with the understanding that we're in a range market, I'd be a little bit, I mean, this might sound backwards too, but I think I'd be a little bit more hesitant to look for big swings to the short side just because I know we're in a range market and the bulls are going to keep trying. Vinny says, Nico, I transitioned to measuring goals in points, and it's been a huge help for my records. Thanks for that piece of advice. Yeah, I see. I think it's not only important for record keeping, it's also important to track your performance as you scale. Because, you know, when you're trading small and you have a red day, and then you start scaling up and you have maybe a smaller red day in points, the number's going to be a lot bigger. So it's like, how do you really know how you performed? It looks like you performed worse, but you actually performed better for a red day. And plus, the added benefit, the big one in my head, is that when you start measuring goals and points, you don't cap yourself, which is just a dumb way to set it up. Because eventually, if you stick with this, I think it's only a matter of time, if you're actually interested in developing a true statistical edge, that you're gonna blow that goal out of the water. And then it gets hard to outgrow that little cap you've put in your head. If you're like, okay, my big goal is $10,000 days. And right now that sounds insane to you. But eventually you're gonna hit that. And then you're gonna be like, okay, well now I have to completely adjust my frame of thinking before I can even grow. Whereas if you're measuring in points, there's no limit to scale. You just increase the amount of accounts. You don't have to overcome that psychological hurdle. Alright, so we take out the low for that second leg, and we get about 70 points, right? 80 points. And then we take out the low with that third leg, and we get about 85 points. If we didn't see a trading range start right now, it would surprise me. So I guess what I'm thinking here is I'm going to be watching the 2 minute. Obviously, it's going to give you the same low as the 5 minute, right? But I'm really watching the 2 minute because we can see those little trading ranges develop quicker, 2.5 times quicker. And if we do get a little trading range in the next few minutes, I'm going to set a stop limit sell right below the wick low. So that if we take that out, I can enter short on that takeout and look for maybe 70 or 80 points with relatively moderate risk, basically just risking the channel. Now remember, 250 likes, and I'm giving away a free Take Profit Trader 50K test account. And if you pass, you get daily payouts. It's a beautiful thing. So all you gotta do is like the stream, and we'll give that away if we hit it. Okay, so I'm going to place a stop limit sell. So I am sitting short. Yeah, just gonna get my eyes adjusted here. 50. Yeah, there we go. So I'll risk the I'll risk that channel. This is a 5-minute chart now. I'm just executing off 5-minute, but you know, really, I'm kind of looking at this 2-minute here. I'm risking this channel and see if we can get kind of another bit of a leg, because this is clearly turning into a bit more of a. It's not incredibly strong. I mean, it looks incredibly strong, right? But you are getting little dojis mixed in. So I'm cool to sit short there. Risk on this trade is really only about 50 points, which is plenty appropriate, by the way, for, I mean, look here, about 50 points, plenty appropriate for the volatility that we're seeing on the day. So I'll break the ice with that. And just see if we can get a bit more of a push downside. And we'll look for, you know, 70, 80 points-ish. Better than 1-to-1 reward to risk here on this trade, so I'm cool with that. Again, probability, you're not going to get, you know, 75% probability on a 1.4-to-1 reward to risk trade. Doesn't make it a bad bet, though. So I'll place that on and see if we can just get another little push here. Now, I mean, previously here we did kind of the last bigger trading range we saw. It did actually turn into a little bit of a bull channel. And I mean, if you look at kind of like the signal bar, like if you entered here, I guess if you entered here, you would have been risking this bar, right? If you entered the break of that previous trading range. Yeah, I like the bet. I'm going to leave it as is. Again, I'll stop myself at 854 if we hit it. Yeah, I'm cool with that. Again, in this volatility environment, for me, on a trade of this style, 50-point risk is relatively tight. This isn't really a trade that I'd want to go. I mean, you're kind of grasping at straws if you're starting to risk, you know, this whole curl. Because then you're risking almost 100 points, 95 points for maybe a 70, 80-point winner. And with more of a swing-ish, I would call this a mix between a scalp and a swing mentality. For me, I think that's just a little too inverted for the probability that makes sense here. So, yeah, we'll see if the Bears can hold off 54. If not, we'll stop and move on. Well, Bears trying to hold it off. Chris, Nico, tips for reducing eye strain besides eye drops or dark mode. Yeah, it's listen, it's not fun. I mean, I really probably should wear my blue lights more. I probably should. The problem, the lights reflect off, and it looks weird on video. But who cares? I mean, I probably should. That's really it. But ultimately, you just gotta take a break. If you can help it, man, don't sit and trade for 8 hours straight. Take breaks, even if it's just a few minutes. By the way, we are green now on the trade here. Show you what's going on. Just barely. See if we can get a better push. Holding about 50 micros right now. So risk on this is about 5,000 bucks. And we'll look to get about 7,500 if we can. Now, the reason you might say, well, why are you looking at, 75, 70, 80 points? Well, each additional leg here so far in this move, again, it's easier to see if you look at the 2-minute chart here. Each leg has been about 85-ish points. So if I can get 75, that's a rather aggressive ask, but I'm happy to make that ask. And if we can't get it, that's okay. So again, risk on this trade is 5,000, maybe 5,100 bucks. Reward on this trade is maybe 7,600 bucks. Currently up about 2,000, 2,500. Now, again, I'm trading currently, you can see left of your screen there, the roster. I'm trading some Take Profit Pros. I'm trading Apex funded accounts. And if you guys can get the stream to 250 likes in the next hour or so, I'm going to give away a free 50K Take Profit Trader test account. They're the ones who give daily payouts. It's a hell of an asset, and it's burning a hole in my pocket. So let's hit that so we can give it away. And we'll give it away randomly here today. All right, about 23 points in the money here. 20 points in the money. Joe says triple bottom on the 2. He's looking at the top right chart. That's the 2-minute chart. Yeah, you know, something like that on the 2-minute chart. I think a lot of times, I don't like to use the word noise because I think a lot of people like to use the word noise and chop and whatever. It's all just information. I mean, the market does what it does for a reason. Okay, but on the 2-minute chart, I think if you're looking at like a triple bottom, it's like, I don't know. It's kind of read into things a lot and missing the point of the overall price action. In some ways, you know, I mean, we've had a lot of what you could call double and triple bottoms on the 2-minute today, and they have all failed. You know, that's the kind of thing that a bull would look at to try to get hope out of, I think. Now, eventually today, one of these double or triple bottoms on the 2-minute is going to succeed, but the probability is just... I mean, again, every single one so far has failed. So again, I'm sitting short about 50 micros. My average here is 802.50. At least on the leader account, the average, you can see we just hit 802.50 and it looked like the open P&L was still like $100 red total. So it might be a little bit worse average across the follower accounts, which is whatever. Max, Nico, why do some traders tend to want to only trade long or short? I've seen some live stream traders and they hate taking shorts. Well, I mean, look, if you're trading like momentum small cap stocks, ultimately you're kind of either someone who is a short trader, you're locating shares, borrowing the shares, shorting them, fading the big pops. It's very risky, especially if you don't really know what you're doing. Going to the long side on those stocks makes a lot of sense, and then leaving before the party's over makes a lot of sense. But if you're talking like futures, Max, superstition is why they hate taking shorts, because they're superstitious and they say, well, the market goes up over time, right? Okay, yes, but that's canceled out by the fact that intraday, when the market falls off a cliff like we're seeing, volatility pumps to the moon. So it kind of cancels each other out, right? The fact that the market goes up over time is canceled out when we're looking at as zoomed in as intraday by the great increase in volatility when the market falls. So superstition, I think, and maybe a lack of guts. I'm completely indifferent. I do not care. I don't think of a short any differently than I think of a long. Not at all. Other than, you know, maybe the volatility increase like we're seeing today. That's it. That's it. I'm completely indifferent. It doesn't matter. It pays the same both ways. So again, we're just a couple points really in the red. I mean, average here is 802.50-ish. Again, risk on this trade, about 5,000, 5,100 bucks. And potential reward here is about 7,500 bucks-ish. All right, well, while this works itself out, I am going to grab coffee. I'll be back in 2 minutes. All right, we are back, and that will cut me out. So that was 51-ish, like a $5,000 loser. So let's see what else we can grab here. That right there is just about the best bull sequence the bulls have been able to put together all day. So what's interesting here is if we get a third bull bar now here closing near its high, then for me, I have to start thinking about, hey, are we going to see a potential reversal here? The problem is then we come right into the 5-minute 20 EMA, and you know the bears right now are looking for just about anything they can possibly get their hands on to keep going short. So we have 4 minutes left here on this 5-minute bar. Let's see how this develops here. Right now, it's not really doing much here. KM, surprised by the volume on a Friday after a holiday. Yeah, I mean, listen, this has been kind of interesting actually to see. I was kind of expecting it to be a little bit slower today. All right, what are we at? Can I give a free account away yet? No, not yet. You guys are killing me here. Okay, we've got 1:40 left here on this bar. If this thing can grow a little bit more and then close very close to its high, I know that the bears are going to look at what we're looking at on the 5-minute as a descending resistance, but I would still have to get long and just risk the signal bar, so it'd be a relatively small risk trade. And then I would want to see how we react around that 20 EMA here on the 5. Get top left of your screen. 70 seconds out. Okay. Come on, bulls. Oh, don't wake back on me now. Let's see if we can get a little bit of a pullback. Okay, I'll get long there, and I will risk... Let's see. I'm gonna risk 0875. And then I want to see how we act right around the 20 EMA here on the 5-minute if we can get up there and make a push. Now again, what are bears looking at here? Oh, descending resistance, right? That's great, but if you could have a 90% probability of that occurring, the market ceases to exist. You always have to have both sides. Right, so I'm looking at price action and the best bull sequence we've seen all day. And we'll just see. Straight I gotta put on. Yeah, Scott, those are scammers, man. I don't DM with, or I guess I don't message anyone first on Discord. Those are people pretending to be me, trying to scam you out of your money. Ignore them. Okay, now, if we think about 50% retracement here, if the bulls can actually get a nice pop going, at least a test up toward that 20 EMA here on the 5. 50% retracement would put us, man, 225. Okay, that would put us right about in this region here. Yeah, so we have a couple of checkpoints here. Again, the 20 EMA on the 5. And then the 50% retracement zone. Again, average in bulls, trying to get it at break even. Vineet, welcome. Yep, I show them all the time. Here. Now, what people really want me to do, a lot of times I get questions like, hey, call out this and this and that before you do it. It's like, as if I don't know that you're just trying to copy exactly what I'm doing. Not you necessarily, Vineet, but I'm saying I'm not going to go out of my way to let you guys copy my trades, because you're only going to fail because you don't have my brain. So you won't manage it the same way, and you won't know how to manage it, and the trade, just because I make money taking those setups long term doesn't mean you necessarily will by copying me if you don't manage it the same way. You need to take your own strategy and manage it that way. Listen, if it worked, who cares? I would just let you guys, it's not going to work. Which is why you have to develop yourself. I get it. You don't want to hear it. It's not the easy thing, but if you could just follow somebody and make a ton of money, everyone would sit at home in their pajamas and do just that. But you have to manage it differently than the other person. Well, pretty much break even here. A couple points in the money, maybe. Yeah, break even. Mitts, I'm in my pajamas. I'm 2 hours for the day and hope to be funded by next Wednesday. Cool, good work. Take it easy into the finish line, get funded. And then don't do things differently when you get funded, other than sizing down if you choose to. How do I get a timer on my chart? It's just an indicator inside of, I think it's like a stock indicator in Ninja. TL, it's always fascinated me how everyone's brain is uniquely drawn to different parts of market structure, price action. Always appreciate you sharing your real-time perspectives on market price action. And that's why the market works. You know, man, people come in and you can always tell that they're new when they say things like, man, why would you get short there? That's obviously a long. It's like, oh, good Lord. If it was obviously a long, the market would stop existing. It wouldn't work anymore. There has to be two sides for the market to operate. So the probabilities are always in the futures market between 70 and 30% probability, assuming a 1-to-1 reward to risk to make the numbers easy to explain. And most of the time, probably about 80 to 90% of the time, the probability is even in further between 40 and 60%. It rarely goes out to 30-70. Most of the time, it's on that spectrum between 40 and 60. So if you are looking at a chart and you're like, this is obviously a long, man, you are at least, you're speaking in certainties when there is at least minimum a 30% chance that you're wrong. Minimum, more than likely, at least a 40% chance that you're wrong. If you took a weighted coin that had a 60% chance of hitting tails and a 40% chance of hitting heads, would you bet your life that it's going to land on tails? No, because 40% chance you lose. Let's see if the bulls can get this up through that 20 EMA on the 5. That's kind of my number one thought right now, coming into that. Yeah, Nia wants that account. Hey, get it to 250 and I'll give away again a free 50K. Which if you pass, you get daily payouts. Take profit trader test account. All you gotta do is hit like. David, do you only trade NQ and Y? No, man, I trade net sell option strategies. I trade lots of small cap momentum stocks. In the futures world, listen, you can jump around. You can trade NQ, you can trade ES, you can trade oil, you can trade gold, you can trade soybeans, you can trade cattle, whatever the hell you want. For me in futures, like it's all so efficient that at this point, you know, I'm always willing to change in the future, but at this point I'm thinking like, it's all so efficient that let's just pick a security and focus on that. Like to me is, I mean, the futures markets and the big markets, the volume is so deep that the opportunity is kind of similar across the board, which is not the case, by the way, in like net sell options. Liquidity is very different across those, you know, especially in small cap momentum stocks. In that world, stock selection is everything. In futures, I think the opportunity is pretty similar across the board. So to jump around between securities, okay, I'm going to trade gold for this hour, then NQ for this hour. Yeah, if it works for you, don't let me talk you out of it. If you're making money, that's the whole damn point. But to me, it seems a little unnecessary, at least at this point. Oh, this is how we sit right now on the trade. Testing that 20 EMA on the 5. I'm not going to pull it just ahead of the 20. But what I am going to do, I'll tell you what, is we're going to move this way up. That's not necessarily my target, but I just want it out of the way so that I can pull it freely when I feel I need to. But I'm not in a big rush. But I'm also not really planning to get 400 points out of this trade necessarily. Yeah, Joe, the reason I say net sell rather than like net short, which would also technically be correct, is because when I say net short, everybody thinks I mean like I'm shorting the stock. That's not necessarily true. I'm just net short the option strategy, which means that I'm benefiting from theta decay. I'm benefiting from my V crush. The things that kill short-term options traders, I benefit from. So I just say that to clarify for anyone who might be confused, understandably so. If I say like net short, they'll be like, oh, so you're buying puts on Tesla? Like, no, not at all. I'm net sell position, net short the position, whether I'm running the wheel or, yeah, like you said, credit spreads, whatever. Two legs, four legs, one leg, doesn't matter. So again, we're kind of getting a little hung up here around that 20 EMA. Okay, so David, this is a really good question. He says, do you swing positions longer than a day? Well, not trading prop, but listen, in personal accounts, this is really an important thing for you guys to think about, because the entire point around here is to just take this as big as we fucking can, right? That's the whole point. And we all probably have more time than we realize the way that everything's moving. You're probably going to live longer than you think. So you got to think ahead, right? Intraday is great. Intraday trading is my favorite. However, when you start getting really, really big and you're putting on big positions and you're at a point in your life where it's like, I'm just kind of just trying to hang out, dude. Like, like if you get to that point where you're like, I don't really feel like sitting down and trading for 6 hours a day. Yeah, maybe I'll do it for 2 hours just because I got to keep my mind fresh. But like, I have too much money and not enough energy at this point. Here's the reality. If you choose to start trading a daily chart in a personal account with big money, the futures market can handle big size, and every pattern essentially that you learned on a 5-minute chart or a 2-minute chart or a 15-minute chart or a 1-minute chart, the patterns are all the same. It doesn't matter if you're trading a daily, a 15-minute, a 1-minute. The patterns are all the same. So if you get to the point where you're trading so big and you're like, I just don't want to deal with intraday anymore. I have a family, I have grandkids, I have too much money. Again, not enough energy. I just want to chill and put on trades where I'm risking $250,000 for the potential to make $350,000, and I'll hold it for, 4 days. Okay, when you're at that point, then you can trade the daily, right? And pretty damn similarly to the way that you trade intraday, and you would already know, it's just applying it to a different chart with maybe bigger size or even maybe smaller size, but much wider stops and take profits. So hence, much longer average trade duration. So again, we're about 50 points or so in the money on this trade. I gotta tell you, I'm not in like a massive hurry to pull this off. I mean, that candle right there is a candle that I technically could have gotten long on. So for me to pull this trade off right now, I would be, I think, an emotional decision for me. Now, what I am paying attention to, though, is that 50% retracement region, which is going to be somewhere in here. So I got to think about like 950-ish if we get up there. NT, what's your model / setup? Yeah, listen, anyone who's pushing you a very simple model or one setup is fucking bullshitting you and a liar. One setup will never work because market context changes. Okay, so you guys see me sit here for hours every day and look and say, okay, what's the market context? How does that fit with the zoomed in market context of the day? And now what setup should I apply and when? And then you take it, and 40% of the time you lose, and 60% of the time you win, and over 100 trades, 1,000 trades, you make money. That's called a statistical edge, and it's the way you make money in this business. Anyone who's like, hey, yeah, trade the... I don't even know. Like, there's all these setups that people keep throwing out there, like, this is the model, this is the setup. Sounds great. Doesn't work. But hey, it sells. It sells. That's fine. Me, I prefer to ideally just create as many big money traders as possible so that sells. Selling a single setup is elementary at best. And everyone's gonna realize it within 30 days and then leave. Well, if you guys can get about 100 more likes, we can give away a free 50K Take Profit Trader test account. So let's hit that. David, how much money does the prop firm take? How much does the prop firm you use take from a winning trade? So Apex, you keep all of it up until 25,000 per, I think it's still 25,000 per funded account. And then Take Profit Trader is on the regular Take Profit Pros is an 80-20 split, but you get daily payouts, which is the benefit there. So you keep damn near all of it. All right, you can see that bull body got a little smaller, but we still have that wick on the bottom. But I'm watching this here. Yeah, Patel, I got long here. I said on this whole move, I said, hey, if we get 3 consecutive bull bars closing near their high, again, this isn't perfect, but it's pretty damn good. So I got long on that rollover. Waited for a small pullback, got long. The reason I waited for a small pullback, by the way, was because we had a little wick and this bull body was shrinking a little bit. But that right there was the best reversal bull sequence we had seen all day. And now we've gotten a bit of a move higher. Again, I'm not in a big rush. I would prefer to at least see a test of the 50% retracement. Now, does that lower probability? I could have just taken it off at 50 points and ran home. Yeah, sure, but on this trade, that's not what I'm after. I'm looking for probably at least 70 or 80 points, if I can get that. Now, if it comes to a point where it's like, yeah, the right thing to do is manage early, fine. Coming back for a test here, top left of your screen, of that 5-minute 20 EMA. Mitz, will you close that trade to get back to break even or let it play out? What do you mean? You mean will I cut it at break even, or do you mean on the day break even? The answer to both of those questions is no. That is trading your emotions, which is a massive problem. You never want to do that. Or, if you mean it the other way, that's trading your P&L, which I'm also not interested in doing. It feels really good. You know, you take a little red trade, you're like, okay, you know, down 5,000 bucks. Then you take another trade. I've already been 50 points in the money on this trade. I already could have, you know, closed it for that. But I'm not interested in doing so. And if it turns around and stops you, sometimes that happens, and now you're down even more. But you did the wrong thing by closing it when your P&L was break even. Because the only reason for doing so was you were trading your P&L, which at the end of the day is trading your emotion. It's trading your psychology. You know, Mitz, listen. Very carefully. The P&L is going to be what it's going to be. Do the right thing. Now you say, well, I don't know what the right thing is. Okay, well then you don't have enough experience yet. Just keep watching charts, taking trades, small size, do what you can to develop an edge. Then you'll know what the right thing to do for you is in most scenarios. But if you're staring at your P&L, like, I mean, that number is never going to get much bigger because you're never going to develop an edge. The algorithms that make tons of money for these institutions, they don't give a shit what the P&L is. They just do the right thing. Just trade, do the right thing, and at the end of the day, the P&L is going to be what it's going to be. But the benefit of that is by the end of the week, even more so the end of the month, even more so by the end of the year, it will be green because you executed your edge. What you're doing, closing a trade because you're break even on the day and going, whew, I covered my red trade. I'm good. I'm back to break even. That's the equivalent of the casino losing a hand of blackjack, dealing you another one, winning it back, and then closing the table. That would be extremely confusing. And it would not make mathematical sense, and they would never do that. Scott says, don't you have a video explaining how to calculate your edge? Yes. Yep, I forget what the title is. Yeah, I forget what the title is. I think it might be the how to make your first 10,000 trading, which is not even close to a clickbait title. It's legitimately how to make your first 10,000 trading. I think that's what it is, yeah. We crack out the iPad, and I show you the math of how to get it done. Just is what it is. It's just math. Okay, well, I'm sitting right now. Again, I'm just not in a hurry on this trade, and if it reverses, that's okay. I don't care. But we're like 19 points in the money, 18 points in the money. But I put this on for very good reason, and I'm not. I just. When an opportunity like this comes, where you could at least see a test of the 50% retracement, I prefer to let it play and see if we see that. So again, at best on this trade, I was 50 points in the money, which is $5,000. And taking that off is not, in hindsight, you might say, well, that was the right decision. Okay, well, hindsight, we don't have hindsight in the moment ever trading, so it's ridiculous to even look at things that way. But if we hold the 20 EMA, which we're currently kind of testing a dip beneath, and then we break through the 50% retracement point, which is, I don't know, maybe 60 points higher than where we currently sit, then I want to see if we backfill basically the entire range. And then that trade becomes an absolute monster $30,000 winner. Which again, you forget about the P&L, just do the right thing when it's time. So, leave it on, I'll let it work. And see if it can make the test of what I want to see the test of, which again is that 50% retracement point right about here. Cryptors! What's up, Nico? Thank you for reminding me that price action is king earlier this week. Yesterday and today were great trading days because of it. Good to hear it. Happy to hear it. Keep it up. All right, so I'm sitting pretty much break even on the trade now. What happened to your 0 to 100K a month prop challenge series? It's too small and not fun enough, so we took it live and we're going even bigger. That's what happened to it. John took a 20-point long scalp on the 1-minute break and retest of volume weighted average price, then caught the 30-point short of the break and retest of view up to the downside. Cool, man. Good work. So, you know, well, here comes the rollover of this 5-minute bar. We're 7 seconds out. You know, you get that big bear bar closing near its low, and then the next bar is, as far as a bear performance, I mean, relatively compared to the first bar, it's a little bit weak. But I mean, again, for me with this trade, for me, I just gotta let it work. This is one of those trades that's kind of like a bigger swing. You just gotta let it work. Don't trade the P&L, don't trade the emotion, just let it do its thing and accept the outcome. But man, if we could clear, at least hold the 20 EMA on the 5. See, when you get a big dip like this, and the reason I'm doing this, is because we're in a range market. So when you get a big dip like this, and then you get a reversal, for me it makes sense to say, okay, hey, a lower probability, but really high reward to risk trade could be looking for a backfill of the day's range, at least since the open. Okay, now, again, I'll repeat, we've been about $5,000 in the money on this trade at best so far. But if that can happen, this turns into a $25,000, $30,000 winning trade. Okay, with the risk being $5,000, $6,000. Now again, don't trade your P&L, but Take trades that make sense. And the context is going to change, by the way. A little scalp, you want to go negative reward to risk. High probability, 80, 90% probability. Again, you can only get that because it's negative reward to risk. It's not 1-to-1 anymore. So the 70-30 thing kind of changes. You got to be willing to take trades that are different depending on the scenario. Guys, listen, I have gotten a ton of messages about working with me directly on an ongoing basis, one-on-one. I have opened up a few spots for my elite one-on-one program. You have to apply, and then I will either accept you or we won't go through with it. You can apply at the link that's in the chat right now. Again, that is the elite ongoing basis one-on-one program. I meet with you on video call every other week. I watch over your trading data constantly. I have 24/7 access to it, and we communicate via text and voice message. Okay, that's top level, the elite program. Apply, and I'll talk to you on this phone here in a little bit. Other than that, guys, hey, again, crazy day today. If you got to beef up your accounts, so be it. Again, it's okay if you blew some accounts. It's part of the game here. Code BIG will give you the best deal no matter when you use it at Apex and Take Profit Trader. And I'll tell you guys what, I'm going to let this trade work. Leave it on. We'll see if it turns into a $20,000, $25,000, $30,000 winner. And we'll let it do its thing. I'll see you guys next week. Okay, if you have not done so already, please subscribe to the channel. And hopefully next week, man, we can start giving away some 50K Take Profit accounts for free. All right, guys. See you next week. Have a good one.